Strategist for Full Tick Capital Markets, Kathryn Rooney Vera. And Kathryn, I want to start with the war. We're left with the war. We'll talk about this war on Ukraine, the impacts on the markets today. We were just talking fertilizers. You know, those stocks are the biggest performers today. CF Industries is killing it, Mosaic. I mean, do you, as an investment professional, chase stuff like these that you know, obviously we know why they're moving higher, or what do you do in this environment?
What I do is I look for areas that I think will outperform that today are not popular. And this is what I did a year and a half ago before inflation took off. We said go long inflation hedges. You know, entering into this year, we said stagflation's a risk. So what are the sectors that outperform in what we perceive within the firm as the next phase of the economic cycle? We are in deceleration. So what's the next phase? Right now, I'm recommending defensive positions because right now, you know, it's not in the headlines. Mm-hmm. It's getting a little bit more and more talked about, this deceleration in economic activity, right. Combined with high inflation and a Fed that's so woefully, so disgracefully behind the curve that is going to have to hike rates 50 basis points 2 to 3 times this year. So I think we need to be positioned not to chase things, but to look ahead and to try to get ahead of the market. You know,
to that point, the transpos, which are something of a proxy for the economy, have fallen apart. The semis, which are also a good proxy, have fallen apart. Yep. Defensive areas have done well, utilities and real estate investment trusts. There's one thing, though, this oil market. It seems that could still be a problem even after the war in Ukraine is over. Are you positioned there as any stocks there or the commodities?
That's a tricky one because energy has done so phenomenally, right? Over the past year and a half, a lot of people are asking me that, can I get in now? So the bulk of the appreciation we have seen. Energy, however, outperforms both in inflationary and stagflationary scenarios. So we should have positions within energy. Now, it doesn't look like there's going to be a near-term resolution to the Russian invasion of Ukraine. But when eventually we get that and we avoid whole-scale energy sanctions of Russian exports of natural gas and oil. If we do in fact avoid that and we get a resolution, oil prices are likely to come back down. Mm-hmm. If that's the case, then you're not going to see energy continue to see the performance that we've seen over the past couple of months. So I think we have to be careful in that space. But as you said, if you look at even the ratio of returns with cyclicals over defensive sectors, cyclicals have year to date underperformed defensive. I think you want to be positioned in defensive sectors, especially with an inverted yield curve. The precipitous drop we've seen both in consumer confidence, small business confidence, and services. I think we need to be looking at healthcare, utilities, and staples especially.
Real quick then, Kathryn, so we've got the inverted yield curve, we got signs of a recession, we got a Fed that's trying to play catch up. Is there anything else that we need to understand and know about this market that maybe is not getting enough attention?
That's a great question. Yeah, I think recession is probably one of the things that the market is not taking seriously at this point with equities where they're at. We have seen a negative move recently, but I think we do want to be long gold, long defensives, maybe raise some cash. You know, a lot of guys, I recently reduced my S&P forecast for year end to 4,700 from 5,100. Maybe we could be looking at foreign markets. For example, Europe, there's a price for everything, right? So once you do get that resolution, European equities are likely to get a bounce. Even emerging markets, you could look at Colombia or Brazil. I think you've been looking at Brazil. You know, these are markets where you can still get juice, Charles, that guys aren't talking about.
Right. I love it. Kathryn, that's why we appreciate you. Thank you so much. Talk to you again real soon.
Thank you, sir.